Coming up on Energy TV, it's a special half-hour panel discussion with legends and strategic thinkers in the oil and gas industry.
My thoughts are basically that this is one of the toughest environments I've ever seen, and I believe our basin is all about cost of capital.
Cost cutting in these times is paramount.
We explore the price of oil.
I think the strength will return, but it is so highly dependent upon the economic situation. I don't honestly see the prices breaking out of the 30 to 50 range.
Whether this bust is different from others.
You've got a penalty for illiquidity. You've got risk premiums on access to capital, both debt and equity, and that's different. And so in an environment where over the last decades we've had shrinking discount rates, and we've got an environment where we're unknown how large discount rates are today for evaluation of oil and gas reserves.
And we highlight the opportunities in these challenging times.
I, as an individual investor, have invested mostly in people over time, and people are coming free, if you will, as downturn. They're just popping loose in all sorts of interesting places. So if you can finance a team and give them adequate cash to get them through the next 12 to 24 months, I think you've got an opportunity that could be pretty interesting.
The following is brought to you by Halliburton. Halliburton, from Canada, for Canada.
So welcome to Energy TV. I'm Helena DeVries. This is a special edition of Energy TV where we've assembled a group of strategic thinkers in the oil and gas industry to offer some guidance and insight in terms of what's happening overall in the economy as well as in the oil and gas sector. Of course, it's no surprise we're in the midst of a serious recession and the oil and gas industry is reeling. So our distinguished panel in alphabetical order, we have Paul Colborne, a serially successful entrepreneur. Thanks for being with us. Thomas McInnes, one of the original founders of Stone Capital and Managing Director of Investment Banking. Thank you. James Pasica, partner with national law firm Heenan Blakey, businessman as well as M&A specialist. Thanks for being here. Thank you. Peter Tertsakian, of course, chief economist with ARC Financial, best-selling author. Thank you. And Brett Wilson, oil and gas industry legend, co-founder of First Energy Capital and notable philanthropist. So about 8 months ago, we would have been having a very different conversation. July 11th, oil hit 147 US a barrel. It's come off about $100, give or take, from that level. Peter, what are the fundamentals telling us, and where does the price go from here?
Well, it's no surprise that the fundamentals are weak. Demand is off because of the severe recession that the world is in. The supply side is hanging in there at the moment. There's a lot of extra inventories. There's a lot of spare capacity in the system. So where we're going is probably more of the same, a very choppy sideways, trading prices $30 to $45 for most of the year. There isn't a lot of clarity in terms of the economy, but at this point I think it's prudent to say that things aren't going to get better until 2010. And until then you're going to see prices going, say, sideways with little breaths of hope, but then probably disappointments.
There seems to be a fair consensus that the price is going to see some upward movement. Are you speculating in terms of price, $50, $60 oil for the rest of this year, 80 possible? What are your thoughts?
No, I think those numbers are too high for this year. I mean, I think the strength will return, but it is so highly dependent upon the economic situation that I don't honestly see the prices breaking out of the 30 to 50 range, notwithstanding some sort of positive news on the economic front or possibly some geopolitical issues in the Middle East or other parts of the world, which is not really a desirable way to see the prices go up.
So certainly a lot of volatility. We go from 147 to 40-ish, give or take here or there. So Tom and Jim, can you speak to M&A activity, what we've seen in the past several months, which is pretty well non-existent, and what happens from here?
Well, even if you go back to the 147 scenario on oil, one of the things we pay attention to from an M&A perspective is the bid-ask spread. And when you look at a lot of liquidity and transactional activity, what you're finding is a shrinking of the bid-ask spread between buyers and sellers. And a key issue we're finding today, not just between shareholders wanting to buy or sell equity, is you're seeing buyers and sellers of companies and assets very far apart from what it takes to own an asset. And part of that, yes, is commodity driven, but I would make a major argument and say a big part of that is discount rate driven.
Yeah, I think that's right. And I do though, see in second quarter of 2009, third quarter of 2009, some change to the doldrums in M&A activity. We've got updated reserve reports coming in for year end, and there's beginning to be new transaction metrics established in today's changed world. And I see a number of drivers to enhanced M&A activity for Q2, Q3, 09. In particular, companies need and want to grow to have a bigger and better cash flow base to access their resource projects. Importantly also, companies want to earn a higher or better trading multiple so as to have a better cost of capital when capital does return to the sector. As well, shareholders are demanding for liquidity. And I think a fourth reason that comes to mind is reduced G&A, because cost cutting in these times is paramount, and that's the only element you can control in your business.
Yeah. So a lot of that is repositioning shareholders so they can be better positioned to get access to a better market if and when it recovers, right? But in the short term, my view is you've got to prepare yourself to downside risk protect against some of the things you brought up, right? And so if leverage is a concern, if gas price is a concern, and we talked about oil, but a large percentage of the companies in town here in Calgary and the Canadian energy market, they're gas weighted. And so we have a similar downturn in gas prices. Well, a lot of people are looking at leverage positions and say, look, I want to continue to offer shareholders exposure to upside potential in this market, but I've got to downside risk protect myself, and that's a key issue.
Well, thank you so much, Tom. And certainly, when we come back from the break, because we're out of time for this segment, I want to chat with Paul and Brett about your thoughts. And particularly, Paul, you've started a number of companies. Would you start a company in this environment? How would you do so? And Brett, of course, you've always been an early-stage investor.
Again, there's great people on the market. There is some interesting opportunities. I think Paul's absolutely right. The cost of capital is a core issue right now. So most people will tend to underfinance, just adequately finance, if you will, their businesses, and anticipate that when Peter's right and the market comes back, and I really do believe, I'm more of an optimist than Peter in terms of where oil prices will go, and maybe I'm just an optimist in how quickly they'll rebound, but it might take 12 to 24 months to happen.
Stay with us. We're back in just a moment.
Portions of this program are brought to you by Niblack Mining.
This section brought to you by June Warren Publishing, Nichols Energy Group.
So welcome back to Energy TV and the special half-hour edition where we have a distinguished panel of strategic thinkers talking about issues and what's going on in the oil and gas sector. Now, before the break, we were talking about M&A activity as well as the price of oil. Now, before we broke, I wanted to speak with Paul and Brett about, first of all, would you start a company in these challenging times? You've started a number of them successfully. What are your thoughts?
My thoughts are basically that this is one of the toughest environments I've ever seen. And I believe our basin is all about cost of capital, and I really think Alberta has lost some of its luster in terms of cost of capital. You've got, you need certainty, you need regulatory certainty. Investors don't want to put their money in and have things change, like the royalty panel taxation reversal and you know, the Alberta royalty review. So in my mind, the lack of certainty in our environment right now has created kind of a double whammy down for Alberta right now. So I think it's a very unsettled time to start a company. And I mean, that would be my pitch right now. Tom and I were talking off air that it's about, you wouldn't want to go public right now. There's no benefit to it at this point. And I mean, that could lead into Brett's view because he's done it before.
Brett?
Well, I certainly think that out of crisis comes opportunity, and we're certainly in the middle of crisis. I couldn't agree more that the government's intervention in terms of playing with the royalty structure was ill-timed, ill-conceived, and ill-executed, and that's a frustration to the sector. And we're suffering it even it's magnified. The challenges of the economy have magnified the mistakes in those decisions. But that doesn't stop us from doing strategic investment opportunities where people come and they've got a particular asset they want to pursue. Now, more likely that's going to be in Saskatchewan or BC. And would we back them in this time in a private way? Yeah, we would, because again, there's great people on the market. There is some interesting opportunities. I think Paul's absolutely right that the cost of capital is a core issue right now. So most people will tend to underfinance, just adequately finance, if you will, their businesses, and anticipate that when Peter's right and the market comes back, and I really do believe, I'm more of an optimist than Peter in terms of where oil prices will go, and maybe I'm just an optimist in how quickly they'll rebound, but it might take 12 to 24 months to happen. But to be positioned in starting a new company now is a wise thing.
So this brings us to the notion of peak oil. Do you believe peak oil is here? And is that forecasted into your thoughts on where oil prices are headed? Where do you see them headed and timeline?
Well, I'm not a student of peak oil. I'm aware of the concept, but I've never really factored that into my thinking. Right now, supply exceeds demand. Very simple. And the economy is weak and there's excess supply in the system. But without reinvestment, you cannot maintain, let alone grow production. Very simple. And if you can't maintain production, there will be a day, and it's probably closer than most people like to think, where we cross over again, where things tighten. And the probability of a geopolitical event, as Peter referenced, is high. It's not low, it's high. It's not something we're looking for, but just given past, the probability is high. So I actually believe in I've gone publicly saying that $75 to $100 is where oil needs to be to allow full cycle economics to work, to get the cost of capital to where we need it. Is that around the corner? No. Can I see it coming though? Absolutely. There's two sides to every valley, and we're slipping down one side, but I'm a firm believer that the other side is there.
Peter?
Yeah, I would agree with that. I mean, the day is coming where things are going to tighten again. It's just a question of when. There's a lack of clarity in terms of the economy and everything right now. So it's very difficult to say 12, 24 months, I think. Definitely you'll see things tighten up. Peak oil, yes, I'm a believer in the peak oil. The days of cheap oil are over. We're not running out of oil. The days of cheap oil are over, and I think that's where you would get your 75 to 100, as would I. But I also think that people need to think about peak demand as well, that there are mechanisms in play that are causing societal change in the way that oil is consumed. And that's something that I think you'll start to see in the 12 to 36 month range too.
What about the boom-bust cycles in the oil and gas industry? We all know it's a cyclical industry. Is this bust happened fairly quickly? We went from boom to bust in a matter of 6 to 8 months. Is this different than previous cycles, and if so, why?
Well, I think it's materially different. We've had precipitous changes in the commodity price, crude oil price, before, but both on an absolute basis and a relative basis, the price decline, and over such a short time frame, is of note. But what makes it materially different is the overarching crisis in the capital markets and the debt markets in the last half year that have been superimposed on the commodity price collapse.
Yeah. So you've got a penalty for illiquidity. You've got risk premiums on access to capital, both debt and equity, and that's different. And so in an environment where over the last decades we've had shrinking discount rates, and we've got an environment where we're unknown how large discount rates are today for evaluation of oil and gas reserves and valuations, and that's different. And people are going to take a long time to get their mind wrapped around what that really means.
I think the final point on that would be, I believe the business model's broken, and an investor coming in wanting certainty in this, he goes, what the Alberta government did, what the federal government did on what is the business model in terms of, to go to Brad's point, the cost of capital and the certainty a guy needs to make an investment today. I think those things, we're grasping for what is the new model going to be.
Well, thank you guys very much, and we'll talk a little bit more about what this new model will be after the break, and also we'll look at turning lemons into lemonade and looking for the opportunities and the challenges.
So I'm a believer in the resilience, the innovation, the intellect, and the creativity of the management teams in our oil and gas sector.
Stay with us. We're back in just a moment.
Wealth Creation 101, brought to you by Investors Group Financial Services, Inc. Talk to us about how the plan by Investors Group can help you fulfill your plans for life.
CPAC, Canada's oil and gas entrepreneurs, invite you to their Junior Oil and Gas Investor Showcase. This free day-long event, sponsored by ETV Financial, is your chance to learn about investing opportunities with some of Canada's most exciting junior oil and gas companies. Join CPAC along with Energy TV at the Westin Calgary, Monday, June 15th, 2009 at 9:30 a.m.
So welcome back to Energy TV and our half-hour special edition where we talk to oil and gas industry strategic thinkers and legends. And what we've been talking about is, first of all, that the model in the oil and gas industry across Western Canada is essentially broken. And one of the reasons that we've assembled this distinguished panel for you to offer some insight and some guidance is the fact that all of these gentlemen here are not people who wallow in the current circumstances, but look for opportunities within those circumstances. Every single one of you is that way. And first of all, I'll start with you, Brett. What are the opportunities and what needs to happen with this broken model?
Time will help. I mean, I think the key message you heard from the group, and Peter in particular, is that we don't have clarity on where oil prices are going in the short term. So it really makes it difficult to make investments in the short term. But having said that, Albertans and certainly people in the oil patch are resourceful. And I, as an individual investor, have invested mostly in people over time. And people are coming free, if you will, as downturn. They're just popping loose in all sorts of interesting places. So if you can finance a team and give them adequate cash to get them through the next 12 to 24 months, I think you've got an opportunity that could be pretty interesting. Again, we're a resourceful group of people, and I think we'll manage just fine. But right now, there's no certainty.
Peter, that brings me to a point in terms of, is there a silver lining in this dark cloud? I mean, of course, we know the labor shortages, we know the escalating costs.
Right, right. Well, I think the silver lining is that this industry in Western Canada has been around for over 100 years. I mean, it's seen all sorts of shocks before, whether it's policy shocks, the National Energy Program. 1998 was a terrible year for prices. The price of oil went down to $10. So, you know, we've been here before. This is particularly severe right now, but I think what really has to happen, where the silver lining is that there has to be a big reset button pushed here. And we're not, the button hasn't quite been pushed. There has to be a reset on expectations. I think the next big thing that's going to come out here in the next couple of months is a resetting of costs. I think the cost structure is still too high. Whenever you enter into these sorts of periods where the prices come down quickly, the costs have to capitulate. The service industry has to capitulate in their costs, and everything has to get reset. And even, I'm afraid to say, you know, wages are going to have to be reset lower. There's only so much value in a barrel of oil or a cubic foot of gas, and everything's got to be reset and to make sure that everybody gets a return out of that cubic foot of gas or barrel of oil.
How do you see the new model?
Well, I think that I echo Brett's views that our oil and gas sector is the management teams, the people are the biggest asset, and that's who early stage investors back. That's who private equity participants like, as represented by Peter's ARC Financial, that's who investment bankers back, is people like Paul and his management teams. And it's been said to me by U.S. private equity that Calgary is to Canada's oil and gas business as Silicon Valley is to the high-tech business in California. And so I'm a believer in the resilience, the innovation, the intellect, and the creativity of the management teams in our oil and gas sector. Governments need to keep their hands off the golden goose. The golden goose is no longer there, and we need policy certainty, and we need that for a time frame that lets our capital investment cycle work.
Tom?
Well, one of the things that has been in the U.S. capital markets for years is small cap private, large cap public, and clearly an opportunity in the Canadian energy environment to consolidate the public juniors either into larger cap public stories or to go private through cash out transactions. And so to me, a repositioning shareholders either into larger entities or frankly new equity capital that rolls into cash stories, acquisition stories. I think in both of those avenues there could be stunning rates of return for equity investors over time, but as Brett said, over time.
Paul?
I go back to the point that we're a resilient industry. I'm very enthusiastic about being in this industry. It's a very tough environment. And I still think people, capital, and access to good assets will win out. So I'm a big believer of it. I do believe that Tom's point he just made, the government actually, or maybe it was Jim, has to be responsive to us now and create the environment and the certainty and the regulatory regime that people want to be here again. So I'm a big believer in the industry. I've enjoyed it, and it's all about positioning now for when things turn. And as Brett said, if it's a year to 2 years, that's not a bad time frame.
Well, we thank you so much for sharing your time with us. We could certainly talk for an hour on all of these issues. And again, thank you for your time.
Thank you very much.
Thank you.
Thank you. Well, that's this episode of Energy TV. Of course, join us next week, or you can always catch our show online at energytv.com. Thanks again to our special panel. We'll see you next time.
This program brought to you by realinvestmentstv.com.
Well, I think the silver lining is that this industry in Western Canada has been around for over 100 years. I mean, it's seen all sorts of shocks before, whether it's policy shocks, the National Energy Program. 1998 was a terrible year for prices. The price of oil went down to $10. So, you know, we've been here before. This is particularly severe right now, but I think what really has to happen, or the silver lining is that there has to be a big reset button.
Governments need to keep their hands off the golden goose. The golden goose is no longer there, and we need policy certainty, and we need that for a time frame that lets our capital investment cycle work.
Well, one of the things that has been in the U.S. capital markets for years is small cap private, large cap public, and clearly an opportunity in the Canadian energy environment to consolidate the public juniors either into larger cap public stories or to go private through cash out transactions. And so to me, a repositioning shareholders either into larger entities or frankly new equity capital that rolls into cash stories, acquisition stories. I think in both of those avenues there could be stunning rates of return for equity investors over time, but as Brett said, over time.
And I still think people, capital, and access to good assets will win out. So I'm a big believer of it. I do believe that Tom's point he just made, the government actually, or maybe it was Jim, has to be responsive to us now and create the environment and the certainty and the regulatory regime that people want to be here again.
Good. We're done.